Greetings of the day. Myself, Dr. Vijaya Kumar R., Professor and Head, Department of Commerce, Kristu Jayanti College, Autonomous. Today, we will start this particular session with introduction to taxation. Well, tax plays a very, very important role in nation building and to the growth of any nation at large. And today, I'm going to give you a gist of how and when and how things are working for a country as a nation which collects tax and disseminates this amount to every single citizen of the nation. Today, we will be looking at these topics for our learning so that we understand the system of taxation in our nation effectively. Well, the most important thing of collection of taxes, if you look at any particular nation, the first thing that the nation has to run by itself is because of the taxes that they collect. So, public finance plays an important role, and taxes form the best part and the most important significant role and part of the entire public finance. According to Dalton, public finance is the branch of knowledge which is concerned with the income and expenditure of public authorities and with the adjustment of one to another. It deals with the study of revenue and expenditure of the government at the center, state and local bodies. And therefore, the government collects this amount, the finance from the public by the way of various measures, and taxation happens to be the most important and significant part of the public finance. Well, the public authorities have to perform various functions as to provide and maintain the entire nation. It's the duty of the government to serve the people of the nation. And in order to do that, they need to collect the money in the form of taxes. And this money is used in order to keep the law and order, provision for defense, production for bringing in economic development, and these performances functions require large amount of funds which are absolutely raised through taxes, fees, fines, commercial revenues and loans. Well, public revenue is the amount that is being collected from the public by way of taxes, and these include various sources that might have been derived its income, and these sources comprise of income tax, commercial revenues in the form of prices of goods and services supplied by the public enterprises, administrative revenues in the form of fees, fines, etc., and gifts and grants. Well, the government collects money to run the government with various sources such as public revenue and public receipts. Well, the public revenue includes all that income which is not subject to repayment by the government, which means the government charges this and collects this from the public by way of taxes, fines, commercial revenues. But whereas public receipts, when there is too much of expenditure made by public revenue which is being generated, that means the income which is generated is lesser than the expenditure of the government. Therefore, the government has the process of borrowing the fund from the public by way of treasury bonds and by way of issuing various bonds to the public, and also by issuing the currency. And therefore, public receipts include both the public revenue plus the public borrowing that the government makes from the public plus the issue of the new currency into the economy. Well, here comes the most important part of public revenue, by way of which the entire public revenue is collected, which is in the form of taxes. And taxation, the concept of taxation is the act of levying taxes is called taxation. Well, tax meaning it is a fixed charge which is levied by the government on its people for doing any activity which attracts or so-called incidence of tax. And therefore, a tax is a compulsory charge, a payment imposed by the government on individuals or corporations. The persons who are taxed have to pay these taxes, irrespective of any corresponding return from the goods and or services by the government. The taxes may be imposed on income and wealth of persons or corporations, and the rate of taxes may vary according to the Finance Act by the government, which will be presented in the form of the budget every year in the budget session in the Parliament. Well, what are the main reasons or objectives of levying taxes onto the public? Well, the first one is to raising of revenue. That means the government needs money to run the show as a government, and therefore it needs to raise revenue in order to run the country. And then, since taxes are levied on goods and services, the consumption and production, to control the inflation, also the government may opt for taxes and regulate these prices by the way, regulate the consumption and production of this by levying taxes at various rates. And also to discourage the imports and encourage domestic industries. That means we need to have self-sustainability, and therefore the country might levy huge amount of taxes on these imports by wherein they discourage the imports and start encouraging the locally produced of products and services. Stimulating investment. There are many reasons where in order to acquire certain benefits in the form of deductions and in the form of rebate, there could be a process of investments being stimulated. That means people will start investing in order to save their taxes or to get a deduction from the payment of taxes. And then it could almost reduce the income inequalities, because people who are earning more money are being taxed at a higher rate, and those who are not earning up to the slab may not be taxed at all. Promoting economic growth. Therefore, when public revenue is generated by way of taxes, it automatically shifts from a particular nation by infrastructure developments, by helping them to grow in various sectors of the economy. And also helps in development of backward regions, because the funds can be focused towards these regions where they could probably get the improvement of or development of the backward regions. And also ensuring price stability, because taxes, the rate of taxes and the MRP which is being taxed, they could probably help you to look at the price stability in the economy. Well, all this is very important, but the father of economics, Adam Smith, gives the canons of taxation. Canons of taxations are nothing but the principles which governs a taxing system, which makes comfortable level of the payment of taxes by the people to the government. Therefore, Adam Smith proposes certain types of canons, which are the principles which govern the entire taxation system. And these principles were given by Adam Smith in order to smoothly functioning of the government in collection of taxes and public revenue. So these principles which a good tax system should and must follow are called the canons of taxation. There are 4 canons of taxation: canon of equality, canon of certainty, canon of convenience, and canon of economy. Well, the canon of equality says this, that tax should be levied according to the ability to pay taxes. That means a person who does not generate any amount of income should not be taxed or should not be burdened of payment of taxes. And therefore, he says that any person who is having more income should be averagely or proportionally contributing to the development of the nation by paying off the taxes. So this principle is also known as the canon of ability. Equality does not mean equal amount of taxes, but equality in the burden of tax. Canon of equality implies a progressive tax system. That means a person who's earning less amount of taxes, less amount of income should be levied less. The burden of payment of taxes should be less, and in case of the other who's earning a more amount of income, the burden of taxes should be on the higher side. Then canon of certainty. This canon says that you need to specify a specific time, and that you need to maintain so that they are going to be very certain that if they do any of these activities of earning income, they will be liable to pay taxes. So according to this canon, the tax which each individual is required to pay should be certain and not arbitrary. That means you need to know at what rate, at what amount, and how much percentage that they need to contribute to the government. And then comes the canon of convenience. The canon of convenience says that according to the taxpayer, because already payment of taxes is a burden on the people of that particular nation, they should not feel that they have been forced to pay taxes, but they should be feeling comfortable. So they need to make the right kind of setup, such as now you can see in our country that we have online filing of taxes. That means you can file taxes from your home itself. So there is a huge amount of convenience in paying taxes. So every individual would willingly pay taxes only when he is having the convenience to pay this particular taxes. And the final canon of taxation talks about canon of economy. Every tax has to be made sure that the tax which is being collected, the collection cost does not go beyond the collection itself. So that is the canon of economy. Well, taxes are classified into two major classifications. Based on the traditional classification, we have something called the direct tax and we have something called the indirect tax. Now, what do you mean by direct taxes? The actual technical definition of direct taxes is where the incidence and the impact is on the same person. It is called as direct taxes. And when incidence is on one person and the impact is on another person, that is called indirect taxes. So examples of direct taxes are income tax, wealth tax, gift tax. And in case of indirect taxes, we have the GST, goods and services tax, and we have customs duty, and we have various other taxes, which is such as octroi and so on. Well, this is the definition of direct taxes and indirect taxes, where we said the incidence and the impact is on the same person, incidence is on one person, and impact is on another person. Well, on the basis of degree of progression of tax, it may be classified into four: proportional, progressive, regressive, and digressive. Proportional tax talks about whatever may be the income which is generated. As the increase of income happens, you have to increase the rate of taxes which is being levied. So therefore, a person who will be earning more income will be paying taxes at a higher rate. A person who will be earning less income will be paying taxes at a very, very lesser rate. And this proportionally we need to have it. And then the process of this particular proportional income is that you have to have a single rate of taxes, which is called the proportional tax. That means whether the income is more or less, it doesn't matter. You will have to pay a single rate of taxation. Say, for example, many of these nations follow such kind of proportional tax system that 30%, whatever may be the income, it is the same amount or same rate of taxes. Progressive taxes talks about as and when the income increases, the rate also should be increasing. And when it decreases, the income is less, you have to reduce the tax rate and tax burden. Well, regressive taxation is just the opposite of progressive taxation. It says that when you earn more and more income, you need to reduce the percentage of taxes, and when you are having less income, you should be taxed at a higher rate. So this is what is the regressive tax system. The next one is digressive taxation. This is the system that we follow in our country. That is, to a certain extent, the rate increases, and after a certain level of income, the rate remains constant. So it is a blend of progressive and proportional tax system which is still followed in our country. To conclude, we can say that instruments of taxation is of great significance on, number one, increasing the level of economic activity, which is called the regressive taxation, reducing income inequalities, which is called progressive taxation, and promoting economic growth, funds could be reinvested for the growth and development of the nation. A tax payment helps to reduce the gap between the haves and the have-nots, as it helps in mobilizing the surplus income from the haves and reinvesting them for the public welfare. It helps these surplus funds to reach the have-nots. So this taxation plays a very, very significant role in the entire growth and development of a nation. Thank you for your patience listening. Hope this helps you to understand the topic of taxation a little more in wider scope. Thank you.